Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on euro currency. So here we actually have only one important change compared to yesterday, because all activity that we see mostly stands on intraday charts. On a daily we do not see something really impressive, so market mostly stands in a tight range. This candle that has been formed last week, this strong acceleration, and since then 5 sessions in a row market is calling inside of it. So this is not actually bad in general. It's because if we take into consideration that market is overbought, the so tight standing near the top, near the overbought level mostly indicates existence of the demand for the euro currency, that the bulls support current market and do not let them to show any deep pullback. Although for example, the drop back to the 112 area probably would not become the strategy, and if market would reach the oversold here on the daily near the fib support, all the better. But currently we have this market stands in a tight range, which is actually not bad. On the dollar index, picture mostly stands the same. You could see that it stands very close, even closer to the extreme point, rather than euro currency. So there also we do not have any big changes. On the 4 time frame chart, what we have, market stands near the triangle line, so calling around it, doesn't show any return back to the lower border, and mostly everything that we said about the possible butterfly pattern and target, all the things stands the same. Here we also have the bullish dynamic pressure. With this you can see MACD shows downside action, while the price obviously is not bearish, also suggesting move above the top. This grabber I already explained yesterday. What does it mean? So here we have it on the spot market of the big retail brokers. You can find it Oanda, Saxo Bank, FXCM. So there it shows that it exists, but it doesn't confirm either on the Chicago Mercantile Exchange on the futures, either on the dollar index. So there we do not have this grabber. So, but that's why I think that it's not quite reliable. So I just keep this marking for some time. But in general, you could see that overall performance also doesn't suggest that it's probably it doesn't look like the performance after the grabber. So it mostly stands flat. But most important thing that we have on the hourly chart with the patterns that we discussed. So if you remember, our major pattern that suggests the possible upward action, additionally to these things that we have here, is a reverse hand and shoulders, right? So we talked about. But yesterday we said take a look here, as might be another minor pattern, direct hand and shoulders, that potentially suggests the kind of the ABCD retracement for the deeper level. A deeper level absolutely doesn't contradict to the idea of the lower standing shoulders, because by taking a look to the left, you could see that the shoulder in general even stands even deeper than it potentially might be here. And we said you have few options for trading. Either you split your position in parts, or you wait for this. For the purists, if you would like to catch the market precisely on the reversal points, then you could wait when this retracement will be completed and this pattern will be done. But things that I see here suggest that probably we will not get this downside action. So once again, the splitting of the position proves that it's in most cases this is the best choice to apply. So take a look. We have tested neckline once, twice. Here's a lot of volatility. Market right now jump out of it, forming the bullish grabber, and here is also kind of the reversal performance. So also bullish grabber might be formed. So obviously this type of the performance doesn't actually relate to normal price action for a bearish pattern. When you have the bearish pattern, you see a relatively fast completion of the right arm and then downside action. Here it mostly stands in favor of the upper continuation and failure of this pattern. So from that standpoint of view, I do not see really big reasons to keep waiting for deeper retracement based on this pattern. And also, you have taken position right there, splitting your position in part. Probably this was a good decision. So based on this action that we see, if once again Donald Trump will not tweet something today, then probably everything should go with our trading plan. So this is mostly the bullish sign and might be the final stage before we get some extension to the upside. So that in towards what we have here. Targets mostly stands the same as we said. First is the 115 area, then it might be also 115.30 if your currency will try to complete the butterfly target. So that mostly what we're watching for.